any day or morning that is more prone to be a good um, time to play smaller than regular, this is the time. Get yourself in the flow. All right, you know what we do at this particular time? We really scan through our 6 to 10 plays or potential plays. We're looking for those narrow fat fours if they are out there. Now, we don't have many coming into this morning because Friday, the market snapped back quite impressively. So guys, whenever you have, let me get my pen up here. Whenever you have a market that has a late day rally, you're going to start the morning, the following morning with a wide fat four. The same way it was the reverse, a sharp drop still leaves behind a wide fat four. So most things are going to be wide in nature. All right. So this makes, for instance, like Microsoft is wide and indicated to open up even wider. Look at that. All right. So the gap is even stretching the wide fat four to be even wider. All right. Now that means that you can play some of these things opposite, like I'm just doing now here. Boom. All right, so just to show you guys, I know I jumped the gun here. Made a quick 348 just to show you what I mean here, where you're already wide and you open up wider. Just take a short really fast right there. And just to show you what I'm talking about, this is not really, a trade. This trade is a little tricky because the 200 on the 5 is right there. But I just wanted to give you a quick indication of wide fat 4 being stretched wider by a gap. There's a tendency for at least that initial move to be opposite in this direction. All right. All right, so I'm out of that trade. That's not the most ideal one, simply because on the 5, look at where the 200 is. Right, so that's why I got out of it really fast. But I just wanted to demonstrate the tendency of the stock to go that way, at least initially. All right, but not all the time. So remember, guys, we're probability players. All right, we can't play things all the time. We can't expect things to happen the way they should happen every single time. It's just not going to happen. It's not the way life works. It's all about probabilities. All right, guys, square looks like a short, even on a bounce up the bar. See the 200 up there? All right, that looks like a short up there. With the 200 as resistance and the violent bar. Oh, that was fast. This thing is all over the place. All right, guys. So that was another quick 400. So remember, guys, the initial play was 348, so I added a little extra there on a quick little scalp short on square. Again, guys, coming out of these things early for you. So what I try to do sometimes is just have a variety of plays to show you your themes, right? Whereas you'll play these out, but I want to show you themes. Like this is the violent bar theme. Microsoft was the wide fat 4 theme. If I can show you a variety of themes in a session, that's really cool. Let's see what's negative here. So Fab, look at Facebook was ideal. Here's the wide Fab 4 being stretched wider, and there's your drop, and it's continuing the drop. Actually, that's a very beautiful one. Oracle, wide Fab 4, stretched wider by the gap. Roku, yes, beautiful. Wide Fab 4, stretched wider by the gap. Boom. And what's beautiful about the Roku is that it opened right at the 200 on the 5. You see that? So you got double, you got confirmation from your 5 on the wide range gap. Beautiful. That is beautiful. See, you got a bear 280, Betty? What kind of play is that? Damn, that must be extra bears. He used to have a trader who was famous for, you know how like some people just are lucky they get struck by lightning more. They get struck by lightning more than your average person can be struck by lightning, which is almost never. You ever hear those stories? This person's been struck by lightning like 12 times, right? Yeah. Well, I had a trader who used to be 360 all the time. We used to call him 360. So like he'd take a bull 180, then stop and reverse on a bear 180, only to be stopped out of that with a bull 180. And they would be legitimate stop outs. But how this happened, this is the rarest event. How this would always happen to him is crazy. 360. Look at the snap, guys. Wide range, go the other way. That's what's going to happen most of the time, guys. Wide range, you go the other way. All right, are you seeing this clearly, guys? Are you seeing it? Wow. Mariatal, you're in it. Nice. All right, good. Guys, this edge that you have with position, knowing position, really places you in a very rare group of market participants. I'm not just saying that because you're my students. It's truly for real. There are people who are buying these openings here, you know, a lot. There are people who think that gap up means good every time. Alexander, you went short Starbucks? Or is SBX? I think you mean Starbucks. Okay. Yeah. And it was well, yeah, it's a decent bar. A decent bar. I mean, that's not a Roku bar but I want to see if I can find. Oh wait, what did I do? So guys, remember this square I did real fast? But look very carefully. I'm gonna paint it in for you. Here's the move up to the 200, and there's the new low. Do you guys see that? Yeah, beautiful. That's why I was saying that you could short that move up there with a maximum stop, right? Wherever your max is, and Oracle. Yeah, okay, there's that bounce into the fat bars range. And we're coming out. Some of these things are a little reluctant. But guys, Piton is still trading like a $60 stock. It's crazy. Apple's making new highs, though. That's why you're getting reluctance in things like Oracle, Starbucks. You know, Apple is still strong. Remember I told you, Apple's the leader. So there's your reluctance on the downside right there. Guys, we're going back to risk on, man. I can feel it coming, at least some type of relief rally. Take these things back to the 20 period moving averages, you know, like uh, take these things back toward the 20 period moving average. Doesn't mean we're out of the bear market, but you know, bear markets don't go straight down. They have very powerful relief rallies. These relief rallies are like bull traps, right? They sucker people into believing that the bear is over because the rally is so powerful, only to be slammed back to the downside. So you could have a lot of these things run from here, but really hard. And you could have something like, you know, Bitcoin going from 30,000 to 50, and still it's not over, right? But that's what makes our game so special. You know, we don't really, I don't really care what direction the market moves in. I actually do the best down. I don't know if that's your experience, but I am a far more superior trader on the downside than the upside. Yeah. Yeah. Super wide. All right. So super wide made even wider. Right. So uh, on the guild, And of course, I wouldn't do anything on the long side, but if you wanted to try the short side, there it is. Boom. Stop. There's your play. Very controlled risk too. Nice. Oh, Ramaditra, you're here. Okay, guys, we can start now. Ramaditra's here. We can start. All right. So you're getting a little closer to me, Alexandra, huh? No 8-period moving average on your chart. I might flip it on there every now and then, but I don't like it permanently on my chart. Thank you, Ramaditra. Tiago eBay. Tiago. Tiago, did you play that one short? eBay? Flavia? She played it short? She bought the first bar even after us saying on wide range gaps that the best direction is down. She actually did that? I don't know. That's gangster. It's gangster. Yeah, I know, Tiago, but I'm explaining in her first class that we're thinking that on wide range gaps, we look to go the other way. I mean, I'm spent the whole morning explaining that, right? Let's go, let's go. Let's go, my Brazilians, man. Get with the program. Let's do it. All right. Cisco. What about Cisco? What are you thinking? Now, guys, Roger, when you tell me that it's crossing the 200 on the 5, what's the significance of that? Like some of those comments scare me, you know? Like I don't teach you these novice concepts of, oh, it's the stock is crossing the moving average, I buy. Like, guys, if trading was that easy, you wouldn't need me, right? But we don't do moving average crossovers or anything, so I just don't know what the significance of that is. I'm okay with you noting it out. I just want to make sure that you're not falling prey to some of those silly notions. All right. What about the UAL state? Well, you tell me. Oh, Apple. continuing to grind higher. So you've got limited upside because of that, guys. So, you know, I have to keep reminding myself that this can still be confusing, even though I have to keep reminding myself that it still can be confusing a little bit to beginning traders. But it's hard for me to see it as confusing. Like, guys, wide state, which means that the stock has done this. So that means that you have limited upside after this. You have better upside after that, right? Doesn't that, as a basic concept, doesn't that make sense? That after you have run a marathon to the upside, that you would have more difficulty running a brand new marathon right after a marathon, right? That makes sense, right? That's what I thought. Like sometimes I get so confused as to how this is difficult to understand. All right. The marathon has been run. And you know what the gap is? You ever see like the marathon runners tired. And right when they get to the finish line, it's close between one or two runners and one just dives into the finish line, like literally dives to go through the ribbon faster than the others. So after that almost dead marathon dives, gives it his last dive, can they get up and run a new marathon? No. The dive means the race is over most of the time.